is 22nd of April. I'm going to do a review on the one trade I took this morning. So we're going to start out looking at the hourly chart. You have S&P ES over here on the left. You have the Nasdaq, the NQ, over here on the right. So I'll start watching at 7 a.m. So you can see this bar right here. Bar's your 6 a.m. bar. So this one right here is going to be your 7 a.m. bar. So whenever it opens right there at whatever that is, about 18.052, that is going to be your opening price for 7 a.m. That is whenever you want to start watching it. Alright. So immediately you want to look up here and see where you're at. Look to the left. So whenever you look to the left, you will see we're in this money zone, this liquidity down here, where there are going to be open orders where price is going to want to bounce off of. So you can already see that and expect, you're thinking already price is going to go higher. You see where this one closed right there at that midpoint. See where this is bouncing off of? Right there at that midpoint. Okay? So go ahead and delete that. I'm going to drop down a time frame. So this is your 15-minute time frame. Oh, I got lost here. Where am I? Okay. So now we come over here to your 15-minute. So this is your 6:45 candle right here. That one right there. This one right here will be your 7 a.m. candle. So this right here, that is that same opening price, 18.054 that we just saw. So the opening price of this candle is also the opening price of your hourly candle. So look and see where we are at right here. Look to the left. What did we just do? We just took out these lows. These lows right here. But we are also down here in this pool of money right here. Same thing. Which one? There we go. Same thing right here. See how we nicked the very, very top of that right there with that 6:45 candle. So 7 a.m. you're already thinking, okay, we're probably going to go up here. So I'm going to leave these right here on the screen so you can see them whenever I drop down into the 1 minute. And I'm lost again on the one. Okay, here we go. So your 1 minute, we drop down. This green shaded area right here is the same thing that we just marked out on your 15-minute. So this is what you're always going to want to do. You always want to start out with your higher time frame. Okay, so we bounce off here. You can see we start trading up. But we have all this, just like this gap down here. So that pool of money on the 15-minute, you have it right here on this 1 minute as well. You can see these gaps here. So I mean, just to draw them out here so you can kind of see what I'm talking about. You have all of these. So until you start getting over all of those, you can see how it's reacting right there. Until you get over all of those, you don't really want to open a trade unless we get something like this, where we trade back down. We create another little pool of money right here. Okay. As soon as we close above this, you can start looking for an entry. Now, my normal way of taking profits here would be, I'm going to switch back over to the 1 hour. So what I always do is I mark out the highs and lows of the previous hourly candle. So that's your 6 a.m. candle, that's your high and your low right there. Okay. We're going to drop down to the 15-minute, and we are going to mark out the first pool of liquidity on the 15-minute. That will be your first target. That high of that previous hourly candle will be your next target, and if you want to leave a trailer, you can. And today that clearly would have paid off. It won't always do that, so you got to use your brain with this a little bit. But as you can see, we'll drop back down to this 1 minute. As soon as we close above this, you're going to say this right here is your first target. So you take your little drawing tool here, and you want to get, you know, a 2-to-1 ratio, which is, oh damn, I got lucky there, nice. Now, sometimes if this little gap right here, you see that little, where the open of this candle and the close of this candle, if that gap wasn't there, I would put my stop right there below that candle. But a lot of times that price is going to want to wick down and get into this little gap right here. So that's why I got my stop all the way down here. You know, clearly if I could put my stop up here, now we're looking at, you know, a damn, 3.5 risk to reward. But you know, anyway. So we close up here, come down. You could have gotten in even lower if you wanted to. You know, you could have brought it down if, let's say, you know, maybe you want to get a 3-to-1 risk to reward. You actually could have gotten that on this one right there with that candle. You know, 2-5, whatever. 2's plenty enough for me. So it comes down, trades into this. Start trading back up, up, hit first target. After we hit first target, clearly I'd be moving my stops up probably to right around here underneath this little support area, and then hit your final target. Or, you know, if you want to leave a trailer after this, that was my final target, and get out. So final target, that's a 2.5 risk to reward, and that's your one trade for the day. Simple. Get it done, get in, get out. I appreciate y'all watching. If y'all have any questions or anything, drop comments below.